Hi, this is Ipwr with the US stock highlights here on Share Talk for Wednesday, the 3rd of February. Starting off with a company which I like the name of, at least, Cancer Genetics, and the chart looks pretty good as well. We've had a gap reversal, a gap down from the end of October, and breaking back through the top of that around the $3.40 level has been the bullish signal on the stock. Also broke back above the 50-day moving average at the end of December, and then that spike, which was the initial, the actual late January peak, up towards the $5.95 level. That's the target now, while we hold above the old gap floor there, gap top there around the $3.60 level. So above 360, looking for a retest of $6 or that sort of area. Above $6, we could actually head up quite high, hopefully up towards that resistance line projection from August last year through $8. But that's probably a 1 to 2 month target rather than just a target for February towards $6, which we're looking at currently. Next up, is a stock which are not so familiar to this particular sweep, Cpsh Technologies. Here you can see that we've had a gap to the upside off the floor of a rising trend channel in place on the daily chart since the middle of November. The floor of the channel and the gap for the bottom of the gap there around the $7.27 level. And while there's no end of day close back below that, we're looking to a target as high as $16 at the November resistance line projection, and that could be seen as soon as the end of next month. Any dips in the meantime back towards the initial February peak at $7.95 regarded as a technical long opportunity. A stock which has jumped quite violently today to the upside is Occhio Pharma, a stock which is familiar to traders in the UK as well, and to myself as well, on that basis that it's up and coming pharma situation. Here we've got the shares. The recent weeks have seen the shares break back above the 50-day moving average, currently around the 11 cents level, and a break of the resistance line there from September 2013 would change the picture and give us a potential move towards 45 or even 50 cents over the next 3 to 6 months. So a potential build up there while we're above the 10 cents area on Occhio Pharma. Next up, a stock which is not quite so esoteric. Here we've got Iconics Brand Group, which I believe we looked at before. Nice little bull flag here, you could call it a handle as well, on an extended base that we've had in place since, I suppose, really the beginning of last year. Handle breaking to the upside as they normally do, and while we're above today's intraday support at $2.27, looking towards a late March 2020 resistance line projection as high as $6 by the end of March. At this stage, only well below $2, and the old June resistance for the shares really delaying the upside scenario. Moving along to another stock which looks as though the bulls may be in business over the near term in Med Pharmaceuticals. The setup here is attractive in the sense that we've just broken a line of resistance from June last year. That was around the $4.90 level. End of day close above that should be enough to start the journey towards a top of August trend channel target as high as $10 over the next 2 to 3 months. So that takes us into May, sometime during there, for a touchdown on that particular target. If you're cautious on the stock, maybe wait for an end of day close above the January resistance of $5.32. But it looks as though enough has been done, especially with a gap higher today through neckline resistance around $4.50 to keep InMed on a recovery track. Next stock is one that is also in focus for the bulls, and just getting the shares through now. Ideal Power. The story here is that we've had the shares breaking out with a couple of gaps over the last month or so, which is a very impressive sign. As I normally say, gaps through resistance tend to be the sign of a multi-bagging situation, and in this case resistance at $11.74 in November was broken rather easily in the middle of last month, and then we've had gaps higher. In fact, this is the third gap today we've had higher. The view at this stage is that at least while there's no end of day close back below today's initial support around the $20 mark, we could see a move towards $28 by the end of the month at that June 2020 resistance line projection. Quite pleased with the next stock going up so well, and we've got a situation with the Professional Diversity Network where there's been a massive gap over the course, well, the end of December. Gap through resistance, as I said, is a sign of a multi-bagging or potential multi-bagging situation. We've had the consolidation above at and above the initial December peak around $2, and while we're above that, looking for a top of August trend channel target as high as $6.50. If you're cautious on this situation, maybe you'd wait for an end of day close through late January resistance at $2.76, but it looks as though enough has been done already with the gap higher in December and the bounce above the top of the gap. That was at $1.84, so hopefully Professional Diversity on its way. Stock which is probably one of the hotter ones of the day, and also one that has behaved itself very well so far this week. We've got Lizi up next, and here we hit the top of that rising trend channel from September. The view now is that while we're above that resistance line at $7 and yesterday's peak around the $7.11 level, there could be a fresh move to the upside as high as $13, which is an April 2020 resistance line projection. So above $7 area rather, looking for $13, hopefully by the end of next month. Moving along, and here is another strong contender at the moment. We've got the Lexx Bioscience. Always good to see anything in the bio or pharma area doing well. The top of that gap there at $6.41, so an end of day close above that could be enough to propel the shares up towards a late September resistance line projection target as high as $12 over the next 1 to 2 months. So keep on your toes with that particular situation. Intriguingly named stock coming up next, quite witty in some ways, but Mankind Corporation, man with two N's. And here we've got the situation where there's been a gap through resistance, which, as I said, is one of our favorite setups. And the view at this point is that while we're above that December intraday peak around $4.20, on an end of day close basis, we could hit the top of that rising trend channel from May as high as $8 by the end of next month. We're really lucky it would be by the end of this month. A stock that has been covered here quite a few times before, Pola Power, and making progress in the sense that we've bounced off, I suppose, the lower end of the flag, that we were in the retracement zone from last month's peak at $30.82. At least while we're above the late January support of $15.68, we're looking to a retest of that $30 plus area. If you want to tighten up the stop, then an end of day close back below today's floor at $16.80 would be the place to adopt your money management. One of the favorite stocks here in the US highlights over many sessions now is Sndl Growers, up for a second day running now, gapping up higher today. The main resistance and the main target in the near term is back towards the $1.70 level. If we can crack that soon, we could actually be looking at a fresh upside target, possibly towards the $3.50 to $4 area, which is a line of resistance from April last year. But let's get up to the $1.60, $1.70 area first before we get too excited. Stop loss at the moment back below the initial December peak at 95 cents would do the trick. So not too bad in terms of money management there. Just a couple of stocks to go now. First is Tyme Technologies, and what the bulls will be enjoying here is this massive gap through resistance. We already overshot the previous resistance areas by quite some degree. $5, the retest, hopefully, while we hold above today's intraday floor at $2.80. And the longer we keep that gap in place, the higher the target here for Tyme Technologies. Finishing off with Zyne, which is the ticker code here, which actually stands for Zyne Pharmaceuticals. Here we've got the situation that looks like an extended base breaking to the upside, gap through the 50-day moving average and gap through the mid-January resistance at $3.81, at least while we're above that. Looking for a potential late June resistance line projection at $7, which would also retest May and June resistance from last year as well. And the time frame on that, the end of next month. This stage only really back below the 50-day line at $3.80, really delaying the upside scenario. That's it from me today. More updates tomorrow.